Welcome back, everyone. So, a quick update on Evergrande, the heavily indebted Chinese property developer. As I'm sure you know, Evergrande missed a coupon payment on September 23rd. But as we mentioned at the time, missing that payment was not counted as a default. The terms of the bond gave Evergrande a 30-day grace period to make the payment, and it probably made sense for them to make the most of that grace period, which would have run out this weekend. Last night it was announced that the company had wired the funds on Thursday to Citibank, the bond trustee, and so investors should receive their money before the grace period expires on Saturday. Evergrande shares are up almost 8% right now, and the Hang Seng Mainland Properties Index is up 3.4%. The grace period would have expired at midnight New York time this Saturday, and missing it would have resulted in a default, setting the stage for bond investors to take legal action. This payment will buy time for Evergrande and avoid lawsuits for now. It also sends a good signal to international investors, many of whom are concerned that the company will prioritize local creditors at the expense of foreign bond investors. Evergrande is by no means out of the woods, though. The payment buys them one more week of time. Evergrande had cash and cash equivalents of $13.6 billion as of the end of June, and total liabilities of over $300 billion. They have $36 billion of borrowings and $91 billion of trade payables due in the next year, so they're quite short on cash, and they can only meet those payments by quickly selling assets. Evergrande scrapped their talks earlier this week to sell a stake in their property management arm, and additionally they announced that real estate sales have fallen by 97% during the peak home buying season in China. This only worsens their liquidity crisis. Evergrande suspended their shares for over 2 weeks. The trading suspension was lifted on Thursday after they disclosed that they had terminated a potential sale of their property services unit a week earlier. Evergrande has been trying to sell a majority stake in their property management division for $2.6 billion. This sale fell through as government officials who were brokering the deal were reported to be unable to calm the buyer's nerves. Evergrande also failed to sell their Hong Kong headquarters for similar reasons. As a bit of a side note, Evergrande announced this week that it would fully cooperate with an inquiry into its accounts from Hong Kong's accountancy watchdog, which is also investigating PwC's audit of the company, and we covered that earlier on this channel. So for now, this coupon payment buys the time that Evergrande desperately needs for asset sales, and it increases the likelihood of an orderly restructuring rather than a disorderly collapse. The property leverage problem in China is, of course, more widespread than Evergrande Group. Other Chinese property developers, including Fantasia Group and Sinic Holdings, have defaulted on smaller bonds, and you can see that yields on riskier Chinese borrowers have reached their highest level since 2009. Kaisa, another large developer, has a bond interest payment due today that's expected to be paid, but it's being closely watched. That bond is trading at 35 cents on the dollar right now. The Chinese government has so far given no indication that it'll offer any financial support to the Chinese property sector. Senior officials weighed in on the issue for the first time last Friday when a PBOC official blamed Evergrande for its issues and said that they were being resolved through market and rule of law principles. He added that any spillover to the financial system was controllable. What's happening right now with Evergrande and the broader Chinese property sector is of great importance globally, as it could signal a huge change in the way that the Chinese economy works going forward. This matters both for China and for the rest of the world, as China has been the major engine of global growth in recent years. Between 2013 and 2018, China made up 1/3 of global economic growth. The problem is that the Chinese economy has been more reliant on real estate as a driver of economic growth than any other economy in the world has been, and a lot of this growth has been driven by malinvestment in both property and infrastructure. Now, this is not a new issue, and it's been widely discussed for quite some time. So why has it suddenly become a problem? There are a few answers to that question, one of which is that the Chinese economy, which is fueled by excess leverage and malinvestment, is simply running out of steam. Another reason is that President Xi does not believe in real estate speculation and wants to calm the property market. This was not the case with prior leaders. While China is home to the largest number of unoccupied apartments in the world, housing affordability is amongst the worst in the world. Apartments in Shenzhen cost around 25 years of average household income to buy. In London, a city not famed for its affordability, an apartment costs 13 years of average household income. In New York, the multiple is 8 years. Another reason that this might be happening right now is that China is showing relatively strong growth this year, mostly due to a bounce back from the terrible prior year. China can allow the property sector to contract this year while still coming close to their growth and job creation targets. China's ruling party convenes for the first time in more than a year this November to lay the ground for a twice-a-decade party congress in 2022, which is expected to extend President Xi's term as leader. From a political point of view, it might be hard for Xi not to support the property market before this important political event. But from an economic point of view, it might be high risk to do this, as eventually the chickens do come home to roost. As I covered in my prior videos, Chinese regulators who've been trying over the last few years to reduce the economy's over-reliance on debt implemented the 3 red lines for property developers in August 2020. The 3 red lines were hard limits on a property development company's debt-to-asset ratio, its debt-to-equity ratio, and its cash-to-short-term debt ratio. This new policy had an instant effect on property developers. Not only could they no longer borrow, but they were forced to deleverage. This meant selling assets, laying off staff, and taking losses on the chin. And all of the property developers were doing this at once. This caused a spiral, as the losses only made their debt ratios look worse, putting further pressure on developers to deleverage further. Right now, Evergrande is the firm struggling the most, but the pain being inflicted by the 3 red lines on Chinese property developers is, as you can see, much more widespread. As the pain intensifies, you have to ask if the government will reduce their pressure on these huge property developers. The government specifically wants to reduce leverage and speculation and increase housing affordability, and there's no way of doing this without inflicting pain. The question is, will the government ease up if the problem of default starts to get out of control? Xi has not gone easy on the tech and education sectors in China and seems to regard all Chinese companies as instruments of a one-party state. There are a few choices that can be made. Beijing can decide to accept a much lower growth rate going forward. They can go easier on the property developers by easing off on the 3 red lines. Or they can increase local government infrastructure spending to make up for the shrinking property sector. I think they're unlikely to decide to accept a lower growth rate. This wouldn't be politically acceptable in the short term. Increasing local government spending might be tough too, especially because a lot of local government revenues come from leasing land to property developers. Thus, the most likely outcome is that Beijing relaxes the 3 red lines a bit so that they can better manage the decline of the property sector. It would appear that China has a goal to switch from property development as a source of economic growth to green energy. Between now and 2060, $46.6 trillion will need to be spent to meet China's carbon neutrality goals. That comes to $1.2 trillion per year being invested for the next 38 years. That leads to the question of whether this new industry can step in and be big enough to make up for the shrinking real estate sector. If you enjoyed this video, you'll probably enjoy my other video on the 5 biggest fat finger mistakes in markets, which is available at this link. Talk to you soon. Bye.